I think it can be a soft landing. I think the Fed is done. So basically, looking at the data, seeing the data between now and September, they will never acknowledge that they're done. I think what you're going to see is the data is going to continue to support them pausing. They're going to say, look, we reserve the right to come back in the market and add new hikes just to tamp down the long-term inflation expectations. But we think all of their tightening is now in the rearview mirror, and that sets the stage for positive growth moving ahead. The other thing we have to keep in mind, and I think they're cognizant of and a little bit worried about, is we passed a tremendous amount of fiscal stimulus in the United States, infrastructure build with the Inflation Reduction Act, and much of that money is just starting to hit the market over the next 12 to 24 months. So it's going to be positive for growth. But I think the Fed is reserving the right to stay restrictive just in case all of that money hitting the economy leads to some type of short-term resurgence in inflation, which we expect that it won't based on the trend of the inflation numbers. But I think they want to reserve that right to tamp it down because that's a lot of money that's going to hit the economy. It'll be good for the economy. It'll be good for jobs, but we have to keep an eye on inflation.